Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's been a good day so far for the markets. In fact, both the Sensex and the Nifty are, inching towards the day's high, looking quite strong at this point in time. 58,064 for the Sensex, up by 437 points currently. The Nifty hovering at 17,107. That's up by 118 points, so 0.7% of an uptick that you can spot. Definite recovery from yesterday's lows as well, but will this rally sustain is the big question that we have in mind, because we've been seeing a very volatile March so far. Let's also look at how the other factors in the markets are doing, especially the broader markets. The mid and the small caps have also inched higher, with the small caps up by 0.7% in tandem with the benchmark indices. The India VIX is slipping further, 5.5% lower right now, 15.13. So that's also indicating some stability in the markets away from the volatile action that we've been witnessing so far in the last few weeks. Market breadth also turning a little positive, with 27 advances to 23 declines on the Nifty 50 pack. The stocks that are actually moving the index higher are some heavyweight counters like Reliance Industries. You have Bajaj Finance, Bajaj Auto, HDFC Life, now even Adani Enterprises is up in the green. You have Titan. These kind of stocks are moving up higher. Axis Bank also up in the green. Among the top gainers, ICICI Bank. So most of these banking majors, life insurance majors and heavyweight counters are helping the markets recover. On the other side, you do have some FMCG counters that are still sulking in this trade. 1.5% cut for HUL, Britannia, and some of the other majors like TCS is down in trade, Divis Laboratories is sulking, and Power Grid also down by 1.8% or so. But in terms of the other sectors, if you spot, apart from, say, the losses that are being seen on the FMCG and the IT index, and slight cuts being seen on the pharma index, and now even the realty is actually slipping lower, rest all of the sectors are still positive, led by the gains in the banking space, with the Nifty Bank clearly outperforming the major indices today with a 1.4% uptick for that one, and all the factors contributing equally. In fact, it's the PSU banks that's leading among the constituents of Nifty Bank with 1.7% uptick, and 1.5% uptick for the private banks and also the financial services as well. Apart from this, the media stocks doing well, and the metals are shining bright too, with 0.5% of a move on the upside. Let's now welcome our guest on the show. We have Mr. Gaurav joining in. He's the head of capital market strategy at Sharekhan. Welcome, sir, and thank you so much for taking the time out for this discussion. Overall, I wanted to take your outlook on the markets right now. We have seen this bounce coming today, but will this bounce sustain is the big question, because we are heading towards decisions by the US Fed on the rate move, and that will be the first meeting after the financial crisis and the worries that have emerged across the globe because of the SVB crisis, slipping also getting into Credit Suisse crisis as well. So the banking industry will be eyeing all the statements of the US Fed. Amid all of this, how do you really see the markets really moving from here on?
So, what we have seen for past say 4 months, that the stock markets have been going down, and you have had all of this bad news. You have had issues with banks in US, then you had issues in banks in Europe. There is news that in this year, after a gap of this in 4 years, you might not get the right kind of monsoon in India. So with all this news, market have gone down by almost 900 points to this 1,000 points on Nifty, which is a sharp fall. However, if you see, markets have been holding on to its lows of 16747, which was made uh, in this thing September, and that I think is an extremely strong support. Another point which you need to look at is that there are heavy dissing shorts in the system. The net long of this thing FII stand at this 8.6 percentage points, which is among the lowest that we have seen for years. So this means that a lot of this bad news is already in the price, and if there is some amount of positive news, the stock markets could actually see a very strong bounce from here.
Yeah,
In
yeah.
terms of Fed, what we believe is either Fed will hike with a small 25 basis point, and will not give very hawkish tone, will indicate a pause. That is our this assumption. If that
Mm-hmm.
happens, I think then stock markets will do well. On the other hand, if there's no hike and the statements are extremely hawkish, I think that will actually be extremely bad for the markets.
Okay, understood that. But the question that is worrying investors at this point in time is what should they be really doing and what should their strategy be amid all this volatility? Now, some of these investors have already built in positions. Some of them must have been waiting with fresh money at hand to deploy at this point in time. What's the kind of strategy that you're advising investors to do? Is it the kind of market where you should buy on dips, or is it the kind of market where you should sell on rally? What would your take be?
So, if you are a small investor, you should do SIPs. That's, I think, is an excellent way to invest in equity markets. Even in stocks, if you invest, you should invest in a staggered manner, because the equity markets in next few months are going to be extremely tough. That is number one. Number two, if you are a high risk investor, then I think you can start doing aggressive buying, especially in some of these spaces which have had an extremely large fall, which I believe is banks, because banks have really this thing taken a knock on the chin. And if there is this bounce from here, I think this banks are going to outperform.
Okay.
But as an investor who does not want to take risk, want to play safe,
Hmm.
you could actually look at the stocks which are not exposed to the slowdown across the globe.
Sure.
That would mean that you will not buy exporting companies, you will not buy IT, you will not buy banks there, and you will look at those stocks which will actually gain from the slowdown across the globe. That means the
Right.
oil the prices will be down in that case, so you can buy stocks that will actually gain from that.
Sure.
You will also buy stocks which will be this thing driven by spending in India. So this you will have to look at look at stocks like that.
Absolutely, and that's what we'll help our viewers and all the investors do right now. In our discussion today, our focus will be to help all our viewers really construct a recession-proof portfolio. How do you do that? Indications coming in. Mr. Dua has already been focusing on telling you that how you should be focused on those stocks that are domestic-oriented and not, maybe affected by the global movements on the macros and any kind of developments right there. So avoid banks, avoid IT at this point in time, but what kind of stocks should you be really getting into? That's what our focus is going to be. We are going to be discussing 5 stocks which could perhaps benefit or in turn outperform in the kind of slowdown and in amid this volatility in the markets right here. So let's start off with the first stock, Mr. Dua. Like you said, the stocks one should look at perhaps is which may benefit from domestic consumption. So in this space, would you really look at the fast moving consumer goods, FMCG as a space? Can that really benefit any stock from this basket that you would want to highlight?
Yeah. So we like FMCG staples, but the problem there is the stocks are not cheap. But you
Hmm.
have one stock called ITC. ITC has a very small exposure to FMCG, but they are largely into this cigarette business.
Hmm.
Cigarette business and alcohol business is one that does not get affected by the slowdown across the world. In fact, what you see is that there's RM cost, or the input cost will this thing ease out. Stock is not too expensive, and also their this hotel business is doing extremely well.
Okay, so ITC as the first stock, what kind of upside can one expect here, sir, from the current levels?
See, all these stocks that I'm talking about can give you 20 to 25% from here. Uh,
Okay, 20-25% upside from the current levels. That's 377 on ITC. Growth in the tobacco business, strong pickup in the hotel business, likely to really aid the momentum on the upside for ITC, which already was one of the best performers, or has had a great run in 2022 as well. So perhaps this year as well, the run up could continue. So that's the kind of move that you can really expect. You were also talking about how the oil and gas space, that should be definitely on the investors' radar, keeping in mind that the crude oil prices have been coming down. down. So in that respect, any kind of stocks that you would want to recommend from the oil and gas basket?
Uh, the, this Bharat Petroleum will be our pick there. Uh, BPCL is very attractively priced right now. It has an extremely good yield of close to let's say 5 to 6% in terms of dividends, and the lower oil prices leads to this decline in the under recoveries there. Also, the gross this refining margins have been improving for past few weeks. So all this, I think, makes it this extremely good stock to buy in this kind of a scenario.
Okay. What about the defense basket? That has been something interesting as a theme that has emerged in 2023. Most of the investors and analysts have been looking at the defense space as an attractive opportunity. Do you have something from this basket that could perhaps not be affected from the overall slowdown or recession that may or may not hit us?
So yes, I think that is the space which is going to grow in India. You've seen about a week back, central this government have basically approved 70,000 crores of investments, and this thing, a lot of these orders have gone to HAL, Bharat Forge, and other players in this space. We like Bharat Electronics. We believe that has a very strong order book. It has a niche in its space, and the stock is also this thing fairly priced. It has actually this thing come down from 109, to around 90 odd, and at this price, I think it's a buy with uh, very low
All
risk
right.
of this thing downside from here.
Okay, Bharat Electronics, BEL is what you're talking about, which may again show an 20-25% upside from the current levels, and that could be an interesting play on the defense from the defense pack because of the capex play and the healthy order book that the company has at this point in time. What about the sugar space? Is that something that you have been tracking? We've been seeing cyclical moves on this, but because of a whole lot of focus in this space because of the ethanol story, focus is coming on the structural factor as well. Can this story also emerge strongly if one has a huge or a long-term vision and one wants to include anything from this basket to their long-term portfolios?
I think this space has underperformed in the past year or two,
Hmm.
and now it is coming back. You have this ethanol story which is growing, and these listing companies are able to sell at extremely you know good distinct margins. Apart from this, what we have seen that this sugar prices across the world are up, and if the monsoons are weak in India also in this year, sugar this prices in India will also go up sharply. So some of these extremely large players in this space, like this in Balrampur Chini, is a stock. I think this one can buy safely here.
Okay. Okay. Balrampur Chini from the sugar stocks, that's something that you can actually look to explore at this point in time for an upside again of 20-25% from the current levels as well. So we've already discussed about 4 stocks from various baskets and from various sectors that could really help protect your capital amid all this volatility. We've discussed from the FMCG, larger hotels, cigarette, tobacco business, ITC, oil and gas space, BPCL we've discussed. We've also discussed Balrampur Chini from the sugar pack as well, and from the defense play, BEL has come in as a recommendation. The last stock, which one would you want to discuss today? We're discussing 5 stocks for a complete portfolio of different stocks that could help investors really beat recession or slowdown.
Last talk will be from the healthcare space. Basically, healthcare is a global enterprise. It's a specialized niche this in chain of hospitals, which they specialize on on this oncology patients.
Yeah.
Uh, Cancer is a space which has been growing at extremely fast pace, and this is a player which has a very strong hold in that space. They've been growing very well for past this a couple of years. Have also seen improvement in their margins. I think this stock trades at around 11, 12 times, which is extremely good given the strong growth outlook here. So that is another stock I think which you can buy.
Okay, so Healthcare Global Enterprise, a niche player in the oncology specialty hospital space from the pharma pack. Also, you've got one more recommendation, another stock that could give you a potential upside of 20-25% from the current levels. So, 5 stocks discussed, all from the different baskets and different sectors, all of them which have strong fundamentals and triggers that could play out, really help you garner a lot of interest and return, even despite the current volatility that we are facing and the fears of slowdown or a recession that may hit the global economies as well. But largely, if you stick with these kind of strong fundamental stocks, you can help protect your own capital and continue to grow returns despite any kind of overall market momentum as well. Well, thank you so much, Mr. Dua, for being with us on the show and discussing these various stocks with all our viewers and overall helping our viewers to understand the best strategies to adopt in this current market scenario as well. Let's look at the markets at this point in time. 420.7 upside, looks like we are going to be heading for a green close after those days of weak close that we've been witnessing, but this could be a breather. How long will it really last is the question that we will have to continue to watch out for. Different triggers, and of course the global markets on the back of the US Fed decisions, that will be the key immediate trigger for the markets. Once that goes out of the way, we'll have to wait and find out whether this recovery could be sustainable on the end of the day as well. 58,058, that's the level at which the Sensex looks to be trading at as of now, for 25 points of an uptick, 0.7% of an upside right now. With that, we wrap up this edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. And you can also continue to engage with us on our social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.